I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, fresh off a huge political victory in California, Lyft riders are slowly coming back after the pandemic decimated demand. How the company's new delivery plans differ from Uber. We're going to talk to the co-founder of Lyft, John Zimmer, coming up. Plus, Yelp shares shot up on news of the Pfizer vaccine. The CEO says small businesses are slowly coming back, but slams Google's, quote, monopoly for destroying innovation. Our conversation with Jeremy Stoppelman later this hour. And TikTok's parent company is asking a U.S. court to intervene in President Trump's attempts to force a sale. We will have the latest from Beijing. But first, a comeback for big tech in the stock market. For more on the trade today, we are joined by Bloomberg's cross-asset reporter Sarah Ponsek in New York. Sarah, walk us through the day and especially how tech drove market action.
Right. We did have a tech turnaround today. This after 2 days in which the Nasdaq 100 actually fell. So a bit of a turnaround today. You see the Nasdaq 100 back on top, up more than 2%. Meanwhile, you look at your other major benchmarks not staging as much of a rally. We actually saw the Dow finish lower, for example. So what changed? Well, not too much. You could say it's just a comeback after lagging the last 2 days. At the same time, though, there were headlines being here in New York City, headlines about further restrictions in the city. It really begs the question about whether or not people will be working from home, stuck at home with restrictions longer than previously thought, especially with the positive news on the vaccine from Pfizer earlier this week. So with that, we did see the stay-at-home trade return, too, with the likes of Zoom higher. Zoom, the best performing stock in the Nasdaq 100 today.
So with tech getting hit hard the last 2 days, is the worst over or is there more to come?
It's a great question. That's what people are, of course, trying to figure out. 1 day doesn't make a trend. Neither does 2 days. And that was the question with the rotation that we saw the last 2 days. But the difference was that we did get true positive news on the vaccine. However, as you see on your screen right now, FANG stocks, again, just posting strong returns above 2%, 3%, for example, the likes of Apple, Amazon, Microsoft, really just taking the lead. And what investors seem to believe is the fact that if we do get a return to normalcy, sure, then maybe you get the participation from small cap stocks. Maybe you get the participation from value, from airlines, from cruise lines, for example. But that doesn't necessarily mean that tech is all of a sudden going to fall behind immensely either. Tech can continue to tread higher. These are very strong companies, but you can also get some more participation from other areas, too, that need it.
All right. Bloomberg's cross-asset reporter Sarah Ponsek, thank you so much for breaking that down for us. Of course, we will be watching tomorrow. Meantime, today, Georgia Secretary of State Brad Raffensperger said the state will begin a county-by-county hand audit of ballots in the presidential race that would be completed by November 20th. The review comes as President-elect Joe Biden currently leads by a slim margin of about 14,000 votes in the state. But President Trump continues to tweet that he will win. That's with the help of his lawyers. I want to bring in Bloomberg Opinion's Tim O'Brien, who has a new piece out on why President Trump may be scared to leave the White House. Tim, you always have a way with words, and as you eloquently point out in your piece, the president has overcome, quote, ho-hum grades, sexual assault allegations, impeachment, and the threat of personal bankruptcy. Can he get out of losing an election too?
Well, Emily, I don't think he can get out of losing an election. The number, Biden is ahead now in the popular vote by 5 million votes. He has a healthy lead that's only going to get larger, I think, in the Electoral College. So he is not going to get out of the fact pattern around this election. I think he is trying to create through these lawsuits and his tweets and what some others in the Republican Party are doing right now, this idea that it's rigged. So he has this crutch to lean on, and he can say forevermore that he didn't lose this election. I also think he's very wary of losing the power and the insulation that the presidency itself provides him. And I think those are the sort of twin explanations for why he continues to engage in this fantasy of declaring himself the winner of the election.
Now, to be clear, Trump's legal challenges are focused on 6 battleground states that he won in 2016. Biden is leading in 5 of them, and there again is no evidence of fraud in any of these states, despite what the president has said. That said, Tim, it seems like he's going to make it very difficult between now and Inauguration Day. How do you think this plays out?
Well, I think there's no question that he's going to make it difficult, but I also think he began telegraphing that months ago. He began talking months ago about the fact that mail-in balloting couldn't be trusted. The election was rigged. I think it was a foregone conclusion that November 3rd to January 20th would be a difficult transition. I think it's worth everyone remembering that when Bush and Gore were in a dispute over the Florida election, it was, only 537 votes that separated the two of them. In all of the states that Trump is contesting now, you're talking about tens of thousands of votes. Even if fraud existed, which no one believes it did, it would have to exist on such an epic scale for those many votes to get over the transom. So the facts alone weigh against him. I think a lot of his legal challenges are going to get dismissed in court. But he's clearly using other powers of the federal government to disrupt the transition. The General Services Administration has not given the resources it typically does to the incoming president-elect to get staffed up and transition. The party itself is feeding this idea that the election results aren't reliable. So he is going to continue to try to burn the house down. That is who he is when he's cornered. And I think we should rely on our institutions, both parties, the media, and our citizens to just stand up for the fact pattern, the truth, and a good, clean process here.
So that said, how much confidence do you have that the house won't burn down, that he won't be able to inflict that kind of damage on the office in the 70 days he has left?
I think he is going to try. I think he will be hard-pressed to do more than sit out in the sandbox with his pail and his shovel, banging them together for quite a while. I think he's clearly doing things to federal agencies and the Pentagon. I find some of the moves he's made in the last few days at the Pentagon to be very concerning. He's putting loyalists in the upper ranks of the Pentagon, and you wonder why when he only has several weeks of a presidency left. But at the end of the day, I think we can all count on keeping him at bay. If that ends up meaning he gets marched out of the front door of the White House because he's resisting leaving, then so be it. But I certainly hope we don't get to that point.
And what is your sense of how scared he should be to leave the White House? There's been speculation that he will face prosecution when he's out of office, perhaps in New York State at the very least. Is that going to happen?
Well, there's 2 substantial New York investigations. The New York State Attorney General is investigating him for possible tax fraud, and the Manhattan District Attorney is looking at him, the Trump Organization, and his children as well for similar allegations, inflating the value of assets to investors and lenders, accounting gimmickry, and possible financial fraud. Those are serious cases that he's going to have to deal with. The New York State AG is a civil case that would probably only involve a big penalty in a worst case scenario, unless it becomes a criminal case. But the Manhattan DA's case could ultimately have felonies involved and the possibility of prison time. Trump is also looking down the fact that he's got over $1 billion in debt that he's carrying now against assets that are getting battered around by the coronavirus pandemic. And over about $400 million of that is coming due relatively soon. And he's in a position now where it's possible he might have to engage in some fire sales of illiquid assets in order to raise money to pay down his debts. So he's got this financial anvil hanging over him and a legal anvil hanging over him, and it's not clear how those will get resolved.
All right, Tim O'Brien, you can check out his latest piece in Bloomberg Opinion. Thanks so much, Tim, as always, for weighing in. All right, coming up, the travel industry has been hit hard, to say the least, by COVID-19. The ride-sharing sector continuing to feel the struggle. We're going to talk to Lyft co-founder and President John Zimmer about how the company is starting to recover. That is next. This is Bloomberg. The pandemic has spared nothing and no one, and ride-sharing companies have been especially battered amid a global plunge in travel and commuting. Lyft, a company that's depended solely on getting people from point A to point B, saw a majority of its riders vanish as businesses shuttered and workers stayed home. Though, with recent news of a potential vaccine and a major ballot measure being passed in California, the ride-sharing business could be navigating its way back. Joining me now, John Zimmer, Lyft co-founder and president. John, it feels like a lifetime has passed since we last spoke. It has been a long 7 months, and I know a very long 7 months for you. But let's talk about it. Earnings looked better than some of the doomsday scenarios had predicted. Ridership is coming back, but it is still way down year on year. What does ridership look like to you over the coming winter months?
Yeah, so quarter over quarter, we saw 47% growth in revenue. And so a very material return, but a ways to go. It's really hard to predict. The news of the vaccine is great for society as well as for Lyft. And so we're really planning to be thoughtful about how we use our capital. And be ready to hit profitability in Q4 of next year, hell or high water, irrelevant to the speed of the recovery.
So when are you forecasting a vaccine will be ready, and how are you baking that into your model?
We're being careful again to predict a slow recovery. As a human living in society with the pandemic, I'm hopeful that it is available in the first half of next year in a meaningful way. And that would also be great, obviously, for our drivers and riders and business. But again, we are ready to hit profitability at the end of next year, even with a slower recovery.
So then what is your longer term view of ride sharing with people leaving big cities to suburbs? Maybe we have a vaccine, but that trend continues. And how does that change the competitive dynamics between Lyft and Uber?
Yeah, one of the ways that we're differentiating is that we're really focused on providing a portfolio of transportation options for personal transportation. So examples of that being bike share. We purchased the bike share system known as Bay Wheels in the Bay Area, known as City Bike in New York, and Divvy in Chicago. And so we've actually seen bike share year over year rise, while obviously ride share has decreased. We've also added consumer rentals to our mix. And so we're seeing the people's interest in transportation as a service is going to be a long-term trend, just as people have moved away from owning DVDs and moving to, let's say, Netflix or music, Spotify. We see the same thing happening in transportation. So long-term, I'd say still healthy. There will be shifts. There'll be changes in where people live, how people get around. But by having a portfolio approach, we'll be able to capture that large shift.
Now, you've bolstered your delivery business. You've done deals with Grubhub to deliver food and Epic to deliver non-emergency or arrange transit for non-emergency medical appointments. What else can you do to expand delivery as we wait for travel and commuting to bounce back?
Yeah, so we're very excited about the Grubhub relationship. So the way that works is with our subscription service that we call Pink, you get access to all of Grubhub's restaurants with free delivery if you're a Pink subscriber on Lyft. In terms of medical transportation, it's something that we've continued to invest in over the last few years. Non-emergency medical transportation, we believe, is a multi-billion-dollar opportunity. And so the integration with Epic allows us to be integrated. I believe Epic's software is used by 70% of hospitals across the country. So that's a great integration. And then on delivery more broadly, we're not interested in being another consumer platform. As mentioned, we've partnered with Grubhub on that. What we're focused on is what we can do to be a logistics layer for other large retailers or businesses without cutting ourselves in between that retailer and the consumer. And what we're hearing from retailers is, while they're going through the pandemic, they wanted to get on some of these different platforms, but that they really want the traffic to be, and their customers to be loyal and organic to their website and to their platforms. And so I think that's going to be a really nice opportunity for us next year.
So how profitable can that be? Like, how do the take rates differ from your other businesses? Obviously, we know that food delivery is an especially costly business and has been for Uber.
Yeah, I mean, one of the big differences, when you talk about Uber Eats, is that, they're subsidizing the costs, the actual costs, and then they're charging the restaurant in that case, anywhere from, I believe a 20 to 30% commission. And so the difference is, if we work with retailers, let's talk, not about food for a second, but let's think of a non-perishable item, and we provide that last mile service at a similar kind of rate to people getting around in a Lyft. There's actually a lot of white space opportunity where existing providers can't provide same day service, like a UPS or FedEx.
Now, Prop 22 was obviously a huge victory for you in California, and I know you're going to use that as a blueprint for conversations at the state and federal level across the country. What states are you engaging with first, and how do you convince, a new administration, Joe Biden and Elizabeth Warren, were against this?
Yeah, this was a big turning point. You have the state of California, which is extremely progressive. I believe President-elect Biden won by 30% in the state of California, and this proposition to allow drivers to be both independent and get benefits like healthcare, as well as disability and additional insurance protections, won by nearly a 20% margin. So it had support broadly from all parties, Democrat, Republican, Independent. And so we will be looking to talk to regulators and labor leaders across the country to say, hey, let's all work together. Drivers want this on a 6-to-1 basis. Drivers prefer to be independent contractors instead of being an employee, but they also want benefits. And so we have to find a way that by providing benefits that they don't all turn into employees, which many existing laws would actually do, because that would result in things like schedules and other things that drivers are and Lyft is not interested in.
Now, John, I know that every New Year's Eve, you are a Lyft driver. Are you going to be driving this New Year's Eve? Certainly an unprecedented.
That's the plan.
New Year's Eve.
Yeah, that is the plan. I've done it every year. One year where we had our first child a few days earlier. My wife was not too happy about that, but this one's a little different. But I'm gonna do my best.
All right. Well, you'll have to tell us how it goes. John Zimmer, Lyft co-founder and president, and I should say your wife is a champ. Thank you so much for joining us.
Thank you.
All right. Coming up, what used to be a nicety has now become a necessity for some. Grocery delivery has seen a boom in the pandemic and provided a lifeline to those at high risk of COVID-19. We're going to talk about that next. This is Bloomberg. Over 1 million U.S. households now use government benefits to buy groceries online. Those numbers spiking 50-fold this year amid the global pandemic. Once a nice perk, grocery delivery from companies like Amazon and Walmart is now a lifesaver for families across the country. With us now, our Bloomberg News West Coast reporter Matt Day. And Matt, this is something that we don't talk a lot about, but we should talk about more. In the past, you couldn't really use food stamps online anywhere. So what's the status now?
That's right. It used to have to go into the store, and that was really until just last year when they started a pilot to expand access and toy around with taking this program into the 21st century. They expanded that a bunch during the pandemic. Now it's online in 46 states and Washington, D.C. In most of those states, you can now buy groceries for pickup or delivery from Amazon or Walmart.
So how does Amazon's offering differ from Walmart's?
Amazon has obviously a much smaller sort of brick and mortar presence than Walmart. Walmart has thousands of stores you can pick up from. Amazon will deliver fresh groceries in what they say is most metro areas. Beyond that, if you get into the hinterlands a bit, you're probably looking at a much more limited selection of shelf-stable or frozen stuff rather than fresh food.
Now, there are many worthy organizations out there working to fight hunger, but some of them actually aren't happy about this. Can you explain that to us?
So I think a lot of them are pleading kind of a lack of information. I mean, sort of the overarching critique is that it just took this long to get this set up anyway. You know, the e-commerce and grocery delivery have been a thing for many years now. Some kind of fault USDA for getting this running. I think sort of the biggest lingering question mark for folks is one, the number of retailers involved, right? It's primarily Walmart and Amazon, though that is changing. And two, there's some concern that, you know, the surface area in terms of coverage for delivery is not as wide as people might have hoped. It's not going to go as far as maybe advocates would have wanted in eliminating food deserts, especially critical for folks receiving SNAP benefits.
Do these companies, Amazon, Walmart, do they have anything special planned for these folks heading into the holidays?
You know, it's a great question and not one that I've put to them yet. I mean, both of them have ramped up donations since the pandemic began to food banks and the like. But no, I haven't seen anything specifically targeted toward food aid recipients, no.
It was interesting seeing Jeff Bezos's response to Biden, you know, winning the election and becoming president-elect. And I'm curious, you know, what your perspective is on what Biden's election means for Amazon, given that the antitrust scrutiny isn't likely to end soon, but certainly it means that Bezos won't have as contentious a relationship with the person in the White House.
Well, that's certainly true. I mean, I think Amazon, like a lot of institutions, got kind of tired of the odds of waking up to a headline. You know, Trump went after Amazon for his contract with the Postal Service. Amazon contends that Trump actually cost Amazon the $10 billion Defense Department JEDI contract. So I think on the whole, Amazon would probably be pretty pleased in having maybe more predictable administration in the White House next year. But you know, it's hard to say with that big antitrust question mark hanging over the whole industry.
All right, Bloomberg's Matt Day in Seattle, who covers Amazon for us. Thank you so much, Matt, for bringing us this story. All right, coming up, how does a business review site stay afloat when the world is on lockdown? We're going to hear from Yelp CEO Jeremy Stoppelman on how he has led through what he describes as pandemic terror, but finally sees a light at the end of the tunnel. That is next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang in San Francisco. Yelp shares spiked 20% on news of the early success of a Pfizer vaccine. The most prominent platform for small business reviews laid off 1,000 people when the pandemic hit, but stands to gain when a vaccine is ready and the economy starts to reopen. That reopening, though, may not be straightforward, as two of the country's biggest restaurant cities, New York and San Francisco, just put new restrictions on indoor dining. I sat down with Yelp CEO Jeremy Stoppelman to talk about how the company has navigated the crisis.
Probably the best word is terror. You know, it was a scary moment, I think, obviously for America, for small businesses, and especially for Yelp, because we're a way to find great local businesses. And, you know, the first thing crossing my mind is, you know, are people going to still buy advertising? We certainly took a pretty big hit in advertising dollars as people paused their campaigns. You know, fortunately, we had functionality that allowed them to set a future date. And so we encourage people to, you know, set a resume date for their advertising months later, perhaps as the pandemic had passed, or at least when the panic would have subsided.
So fast forward to fall, Yelp shares spike 20% on news of the early success of the Pfizer vaccine. And if everything works out, that could mean the economy opens faster. That's good for small businesses. That's good for Yelp. How optimistic are you?
You know, none of us have been through a pandemic before, so we can't know everything. But, you know, I can't say that in the last quarter, you know, things really had come back. Economic activity had picked up. You know, we were seeing people starting to dine at restaurants. Obviously, you know, with the better weather, where we weren't quite into winter yet, people were returning to restaurants. Home and local services, as people spent more time at home with the vaccine potentially arriving and starting to get out there. I think, you know, we can finally say, hey, there is light at the end of this tunnel. That's been the scariest thing about the whole crisis is we had hoped that a vaccine would arrive, but actually knowing that one is there and that it's actually 90% effective, I think is very exciting. Certainly for us at Yelp, hopefully for lots of in the minds of small business owners, and the rest of the world is very happy, I think, to hear that news.
Now, you regularly release these economic impact reports, and from what I can tell, by the end of summer, you found that 160,000 businesses had closed on Yelp. Where does that number stand now? What are businesses telling you about how they're doing region to region?
We have seen, lots of businesses reopen that were temporarily closed. I think the number is around 220,000 of the temporarily closed businesses have opened back up again, which is a great sign. And also from a new business standpoint, especially in the restaurant and food sector, we're seeing new business openings at levels that are in line with 2019. So, that's one really inspiring thing, showing kind of the resilience of American entrepreneurship, is that businesses are, new entrepreneurs are still being born in this environment, which is incredible. I think it just shows incredible tenacity and bodes well for the economy as we start thinking about 2021 and beyond.
Now, the pandemic, as you alluded to, has become very, very political. And I'm wondering what your take is on Joe Biden's election. Are you at all concerned that his safety first approach could, mean the economy opens more slowly?
I think we have to be guided by science. We have to take a dispassionate look. We have to take politics out of it and say, we can't really have a great economy if everyone's cowering, from impacts of the pandemic, or hospitals are getting overloaded with cases. So we just have to take a sensible approach. We have to listen to the scientists. If they're telling us that, wearing masks is going to, diminish the impact of the pandemic, then we should all be wearing masks. It's very straightforward. It shouldn't be a political issue. It's very frustrating that it has been. And I think that costs us valuable time, and even more importantly, costs us health and even lives.
It seems like the next stimulus package might be more scaled back. Are you concerned about a divided government, meaning that small businesses aren't going to get the help they need?
I think the Fed chair has been pretty clear that, businesses need support, especially small businesses need support. And I think the initial stimulus package was a positive. And, we've been all waiting and hoping for another one. And I think, we shouldn't just have socialism for big companies where they can borrow endlessly with cheap debt from the, powered by the Fed. We should extend the helping hand to all these great small business owners that are just trying to get by.
Reviews, I have noticed, are getting more politically divisive. You've got, just in the last few days, Four Seasons Total Landscaping in Philadelphia has racked up quite a few negative reviews. Yelp put an unusual activity alert on there. You're not allowing new posts right now, but how do you navigate something like that?
It's not something that I anticipated at the outset when we started Yelp, that we would be any kind of platform for political expression or showcasing outrage or what have you. But it has been something that has popped up from time to time, happens fairly regularly. That people come to Yelp when a business in particular is involved in some sort of controversy. And so we've had to come up with creative ways to deal with that. And, one of our best ideas has been to showcase, hey, something is happening at this business. It may be in the news or what have you. And we tailor different alerts based on what is happening at that business. So in this case, obviously, I'm guessing users from both sides are pelting that business with reviews. And fundamentally, we want reviews on Yelp to represent actual experiences with local businesses. So when that does happen, we kind of want to hit the brakes and say, okay, we get it. We know people are trying to express themselves politically, but that's not really what Yelp is for. And so we tried to turn the attention to, hey, there's a controversy. You can ignore this Yelp page and we'll clean it up and get back to business, which is steering people towards great local businesses.
Part of my extended conversation there with the CEO of Yelp. We're going to have more of that interview after this quick break. Jeremy Stoppelman speaking out about Google's, quote, monopoly, saying the online search giant isn't just hurting Yelp, but everybody else. That is next. This is Bloomberg. How to regulate big tech will be one of the many issues facing a new Biden administration. The Department of Justice has filed a landmark antitrust suit against Google that will take years to play out. Review site Yelp has been one of Google's most vocal critics. More of my chat with CEO Jeremy Stoppelman.
We've been kind of shouting from the rooftops for a very long time that, there is a monopoly problem in this country, and in particular, there's a Google problem in this country. And Google, has behaved illegally, and has leveraged its monopoly in ways that are destructive to innovation and competition, and bad. It's bad for consumers, bad for small business owners. And so it was great to see some early validation of that from the DOJ.
Now, we've all seen the increasing number of Google reviews, and, Yelp's main complaint that Google favors its own reviews over yours isn't actually the core of the case. Are you at all concerned that your concerns might get passed over?
I mean, it's hard to say where the case goes right now because the state AGs will be, sort of bringing their own cases, and presumably it gets consolidated. So it's hard to know the exact scope of the case. I think, the early signs that, from our perspective are positive. And, again, there's bipartisan support for really scrutinizing Google and taking a look at their behavior over the last decade.
You told 60 Minutes back in 2018, if I were starting out today, I would have no shot of building Yelp. That opportunity has been closed off by Google and their approach. If you provide great content in one of these categories that's lucrative to Google and seen as potentially threatening, they will snuff you out. They will make you disappear. They will bury you. In your opinion, has Google tried to bury Yelp? Has Google continued to try to bury Yelp since that time?
I mean, it's an easy thing to test for yourself. You could just, do essentially any search with local intent, and then see how far down the page you have to go to get to any kind of organic result, especially in, a category that's particularly lucrative from a SMB advertising standpoint. I mean, they've really tried to maximize the revenue, and in doing so have put the consumer in the back seat. And I think that's a real problem. But then also it stifles innovation, because if it's basically there's no organic content anymore, there isn't really that incentive for creators to try and create new and interesting websites, collect information from users. I think it's quite sad. And I think if you talk to the venture capital community, you'll hear that as well. There just isn't as much interest in ideas that are powered by search engine optimization, where you create really wonderful content and then Google or other search engines drive you traffic. Like, it's just Google now, and if it's a lucrative vertical, they're going to try and suck up all of the revenue.
Now, President-elect Biden hasn't detailed his thoughts on antitrust yet, but we know that the Obama administration was fairly close to Silicon Valley, and Google in particular. How would you like Biden to weigh in on antitrust? What do you want lawmakers to do? Should Google be broken up?
Yeah, I think all we can ask for is independent thought. And so you're absolutely right that unfortunately the Obama administration has a very bad record when it comes to antitrust enforcement, and especially Google scrutiny. I think Google's lobbyist was the #1 lobbyist in the White House by visits. And so that's been widely reported. And even as the FTC was purportedly investigating, there was seemingly, back channel communication with Google, which, is very sad to learn of. And so I would hope, and I think there's some indication that Biden is going to take a more independent view of this. And I think we'll have to see, who's involved in the administration, who's in the cabinet, who are the people around Biden. My personal thought is somehow we have to get Elizabeth Warren in there, because she's been particularly strong on, hammering home the point that monopolies are not good for the economy. They're not good for innovation. They're not good for consumers. And so we need someone like that with a really strong message and a strong independence streak as well.
All right, part of my interview with Yelp CEO Jeremy Stoppelman. You can catch the full episode on Studio 1.0 coming up next Friday, November 20th, right here on Bloomberg Television. All right, well, Disney continues to shuffle its TV business following a big reorg announced last month to focus on its streaming services. This, as the entertainment giant will be reporting its fourth quarter results tomorrow. Bloomberg Intelligence expecting the company bracing for another tough quarter with the closing of Disneyland, weak attendance in Florida, and recent mass layoffs. Joining us now to discuss what to expect from the report, Nicholas Wences, Director of Equity Research at Aptopia. Nicholas, what are you going to be watching tomorrow?
Hi, Emily. Thanks for having me, first off. Disney's an interesting company, just given the fact that their stocks pretty much returned to pre-quarantined levels, despite the fact that our mobile data is actually showing declining engagement across their streaming and media apps, and limited activity picking up in their parks apps. So tomorrow we're really going to be focused on kind of commentary surrounding the launch of Milan, which is obviously everyone's looking at, as well as what kind of future content they have to offer in sporting events as well. So far in the quarter, they're releasing their numbers for their fiscal fourth quarter. We're looking at a negative 13% decline in daily active users across their ESPN, Disney Plus, Hulu, Hotstar, and Disney Now apps, that aggregated media and streaming app portfolio that we've built. Why this is important is because we've actually found that there's a strong relationship between these apps on their media and streaming side and the overall revenue that the company reports, excluding their parks business. So this negative 13% growth in daily active users points towards slowing growth in streaming, and also to put things in perspective, like a Netflix or an Amazon Prime Video, who are their core competitors, are actually showing positive growth quarter on quarter in their streaming business. So this indicates that Disney is losing market share, and according to our data, they actually lost a negative 0.9% market share in the quarter in daily active users.
Well, I know Mulan was a hit in at least one household, Nick. What is your outlook on how well Disney can accomplish this transition, given how historically important the parks business has been to the overall company?
Yeah, that's a great question. So as far as content in Mulan specifically, I think it's widely known that Disney has a serious content problem here in a subscriber retention or user retention issue. When you look at Netflix, they had a lot of they produced a lot of content pre-COVID that they've been able to consistently release throughout the entire year, which has helped them gain market share, and our data is showing that. Disney, on the other hand, has limited new content. So we all know Mulan, we all know Mandalorian 2, Hamilton. We're familiar with this. It drove massive spikes in their downloads that we've seen. However, their daily active users or actual engagement aren't really benefiting as much from these new releases as you would think. And this is evident when looking at kind of market share across the top 5 or 6 streaming app platforms. So you have their downloads, they have 15% market share in downloads, but their daily active users market share is only 3.5%. So this indicates that these new releases are sparking or are driving strong downloads growth, but this recycling of old content throughout the year is not engaging or retaining these net new users.
And as for the competition, is it really just Netflix, or are you seeing increasing engagement on Apple TV Plus and HBO Max and some of the other companies that have maybe had less new content and also are challenged during COVID, but are slowly delivering new hits?
Yeah, that's a great point. So outside of the usual offenders like Netflix or HBO Prime, like you mentioned, or Amazon Prime, HBO Max. Yes. HBO Max was just released in May, and now Roku has their own streaming platform that was announced at the end of last month. So on top of kind of Netflix gaining market share through new content, you also have these new players that are entering the market, and it will also be a headwind for Disney going forward.
All right, Nicholas Wences, lots to watch. Tomorrow we'll be across Disney results, Director of Equity Research at Aptopia. Thanks for giving us a preview. All right, still ahead, time is ticking for TikTok. Chinese owner ByteDance is seeking to block an order, forcing it to sell by Thursday. That's tomorrow. The details next. This is Bloomberg. TikTok's owner, ByteDance, is asking a federal appeals court in Washington to intervene in the forced sale of the popular video sharing app. President Trump issued an order back in August requiring ByteDance to sell its U.S. operations by November 12th unless it was granted a 30-day extension. Well, November 12th is tomorrow in the United States. For more, I want to bring in Tom McKenzie, who's reporting from Beijing, where it already is November 12th. So, Tom, what is the latest? Is this forced sale going to happen by tomorrow here in the U.S.?
Well, it seems that potentially TikTok and their owner, their parent company, ByteDance, which is based in Beijing, may get a 30-day reprieve to work on the final details of this forced sale. But we're going to have to wait to see what the Federal Appeals Court finally says. But you'll remember, Emily, that, of course, after the Trump administration initiated this order to sell off the TikTok business, which, of course, has about 100 million users in the US, or face a complete ban. And there was this scramble for how they were going to sell the business off. But initially, it was Microsoft who was in the lead. They eventually dropped out. And then you had an agreement by Oracle, Walmart, and TikTok to set up this separate TikTok entity. Initially, it seemed to get the blessing of President Trump. But then when it was revealed that a lot of the data would still be controlled by TikTok and ByteDance, then that caused a lot of pushback in the US. We also learned, of course, that Beijing would have to have a sign-off on this deal as well. They initiated or put in place new rules that require them to have oversight of any algorithms and any technology transfer to the US, so that complicated matters. And since then, TikTok say that they've basically heard very little from the Trump administration. Maybe this is a result of the elections, but we now get to the point, as you rightly say, November the 12th, the deadline, when they are meant to have this forced sale or the ban outright. So they put in place this petition. TikTok filed a petition with the court saying that they had violated due process. The Trump administration had violated due process. Now, CFIUS, the Committee for Foreign Investment in the US, they put in their own letter, and we got a few more details about what their concerns are around national security and data concerns. Specifically, they pointed to a Communist Party cell that is embedded in ByteDance, the headquarters here in Beijing. That's a concern for them, as is, and they flagged what they say is ByteDance's work with the authorities in Xinjiang, where there have been some pretty significant human rights abuses, and also pointing out, CFIUS, that ByteDance apparently stores and TikTok stores its data on servers run by Alibaba, which CFIUS says works with the intelligence services here. So we've got a bit more detail, but you're right, we're going to have to wait to see how the judges rule on this. It seems they may get at least a reprieve. If they don't, then it goes to the Department of Justice, and they can then force the sale or the ban of this hugely popular app in the US.
Well, and then, of course, there's a question of how does the election and Joe Biden winning it potentially change the outlook for TikTok? Curious, how is Chinese state-run media covering the election of Biden and President Trump's refusal to this point to concede?
Well, there's a couple of points to note in terms of the state media. In the run-up to the election and during the vote itself, the state media was really going big on what they described as essentially the chaos in the electoral system and in the political system in the United States. They suggested in editorials that the political system in the US was failing, that there were protests, that there was instability in the US. So they really played that up. Notably, we haven't heard from the state media or from more significantly officials here that they've reached out to Joe Biden to congratulate him. They have yet to do that. China has not congratulated Joe Biden on his victory in the election. We've heard from officials here saying that they want to wait to see how all of this plays out. Now, the view when you speak to executives and business people here is mixed, quite frankly, on who they prefer to see. Some people that we spoke to wanted to see Trump back in office for another 4 years because they thought he was doing such damage to the United States that it presented an opportunity for China. And of course, they're concerned that Biden will form alliances that could further pressure this country and its ambitions. Others were and are relieved that Biden has won the election because they think there's going to be less volatility in the relationship. There will be less tension going forward. Even if the strategy of containing China might stay the same, the tactics, they think, will be very different.
It's always fascinating to hear how Chinese state-run media is covering events in the United States. Last quick question, Tom. We've got Tencent earnings coming up. What are you watching?
Well, we're watching for anything they say about this significant change in the regulatory environment here. We saw, of course, the stock prices of Tencent and its competitors Alibaba, Meituan and others obviously tumble in the last few days as a result of a significant change in the regulatory environment here around data, around subsidies, around forming alliances. So anything the executives say about that, and there is a view that Tencent is relatively sheltered, at least more sheltered from some of the full-blown impact of this regulatory change than the likes of Alibaba. You've got the likes of Citigroup and JP Morgan saying that this is a buying opportunity for Tencent. We're also looking, of course, for the gaming pipeline. This is a major, or the world's largest gaming company, and also anything else on the social advertising revenues as well. Overall, third quarter revenue is expected to grow 27%, Emily.
All right, well, we'll be watching for your reporting on that. Our thanks to Bloomberg's Tom McKenzie live from Beijing this morning. Thanks so much, Tom, for checking in. And that does it for this edition of Bloomberg Technology. I'm Emily Chang in San Francisco. Bloomberg Daybreak Asia is coming up next. This is Bloomberg.